Hello, this is Cynthia Fick, and this is your Tuesday stock market update. Wow, what an exciting week it was going to be in the market, and it didn't disappoint us. And it's going to get even more exciting as the week goes on. We had a CPI number come out today, and it looks like inflation is slowing. This is a lagging indicator, but finally it's starting to show that inflation is slowing. Of course, the market has rallied yesterday and today. Just to give you an idea, the market at some point today, the Dow Jones was up over 700 points. And at some point it was down, and then we closed the day up 113 points. So that's kind of almost, interesting market that we're having right now. Let's just go to the charts. I'll show you what I think all is going on. Hold on. Okay, let's look at this. This is a chart of the S&P 500 going back to 2020, and then when we started the bear market in January of 2022. And you see this green line again is that 200-day moving average, basically where the stock market, every time it tries to rally, comes up to that point and gets turned down. And it's happened, several times this year. And here we go again. The reason why this is a big resistance is there's a lot of selling pressure. You go back a year or so ago, and a lot of people who bought in here are just waiting to break even. And so every time we come up to these moving averages, there's a lot of selling pressure because people just want to break even. And so if a market can come up to the downtrend, break through it, and spend some time above it in this 4,300 point range on the S&P 500, then that says to me this rally can have some legs. Now, one reason I'm, the probability to me is lesser that is going to happen is that the Federal Reserve is going to meet tomorrow, and Chairman Powell is going to be talking. I don't know that the stock market especially, is really hearing some of the things they're saying. They basically think that they have to get unemployment up. They need to raise unemployment to make sure wage inflation is coming down. There are fewer people that are willing to work. And because that, you have to pay people $18 to work at McDonald's. And so that is called wage inflation. And that is what the Federal Reserve is really focusing on now. And that's what concerns the stock market. And we may, see some more crazy days like we had even today. So the big worry concern is they continue to raise interest rates. That leads perhaps to recession. We just had some indicators about recession that are historically very good at predicting recessions, and we have cleared some of those indicators. Basically, they're guesstimating the probability of us having a recession has increased. That's what the stock market doesn't like, because again, we get a bear market. You add recession, earnings come down, and that definitely affects stock prices. So what we have been saying this for a while, if we continue to go up to the downtrend, meet that line and don't break through it, we could have a little bit lower lows. The good thing about this is that the average recession and the average time frame, including a recession, would show up about the end of April. So this is 2022, the year of taking your medicine, and none of us like it. It hasn't been easy, but it looks like we may be, closer than we realize on when that's going to happen. This is, how painful a typical bear market can be when you add in recession. Again, I'm not predicting this. I'm just saying the probabilities have increased. Hopefully, we'll get a rally with legs, and I continue to be studying the market, letting it show us what it wants to do. This is one of the most challenging and interesting times I've ever experienced. I tell you, I'm doing a lot of studying and staying on top of it. If we need to get more defensive, I will. But hopefully, this rally will have legs. So you guys have a great week, and I'll be talking to you next Tuesday.